Hello and welcome to Perspectives. My name is Jeff Brenner and I am your host. In this economic climate, more and more Americans are using peer-to-peer lending for loans in place of banks. Will this be the new Bank of America?
So borrowing money.
You know, I've heard of this before though, these P2P loans.
Yeah.
Probably about a year ago, somebody told me about it, but it was kind of before the whole everything happened with the bank, and it just seemed like almost like a multi-level or some kind of a scam. But now that all this has happened with the banks, I can see why people are turning to other citizens.
Well, I just heard about it recently, actually, when I went online and I applied. I got denied, but yeah. Actually, there's like two major players right now, and one of them it's pending, and so I'm not really sure what's their criteria. I mean, I guess I can get approved for $47,000 car,
now, I understand
but I can't get approved for $5,000.
Private institutions or individuals putting their own money.
They're individuals,
and
actually,
there. And a private citizen like you and I could go up there and apply for the loan according to our own credit scores. Is that correct?
Yes.
Right. Well, but my question is, and what was confusing to me is, and maybe you can answer this, if you have to go through the same application process and have a certain FICO score, and what's the difference? Why not just go to your bank? How does this help you?
I have so much to say about
what happens
that,
is that because what you're doing is you're cutting out some of the fees and the interest rates. So even though they may have the same criteria in terms of you qualifying, but again, you're cutting out the middleman, so there's a lot of fees that you don't have to pay and the interest rate.
Well, if you got a lower interest rate, then what's in it for them to loan money?
Well,
I mean, let's be honest, people loan money.
I think it's a pretty high risk.
For the investor.
But they're still
for
making
the
money.
investor.
They're still making money.
Right, but you have to have a lot of disposable income to do this, as far as I'm concerned.
Actually,
you have to be able to lose this amount of loan. I know they said the percentage of what defaults on it, but I would be surprised that the way the economy is now, that it won't go up.
It's very dangerous.
But they say you can put in, you can invest like
$1,000.
$1,000.
Let me ask you folks this: have you folks ever heard of loan sharks?
Yeah.
Now think of this way. This is
we're going to a whole other level.
This is a legalized. Listen to me, guys. This is a legalized way to be a loan shark. I have a legit business. I'm going to set my percentage at 13.5%. Do you want it or not? It's a way for rich people to establish a great corporation in order to take the money from what? The poorer people, the less fortunate.
Now,
because you will have to sign over the deed to your car or the deed to your house.
Wow, it's called collateral. I got to show proof that I can repay it, or you're going to take some property from it and repay it.
That's not at 13.95% at a FICO score of like maybe 650.
What's wrong with that?
Because the banks will not give it to you.
Now, see, my problem with that, now you
you
mentioned the whole loan shark thing. I don't mind, like, you said my car being on the line, but now when you say that, I'm thinking about Bruno come knocking on my door. Saying, no, I'm serious, because these are individuals. So, late payment, somebody, hey, where's my money?
But I don't know that it's that intense. I mean, I know someone that actually put money in to be the lender.
Really?
Right.
And it was a win-win situation for both people.
But I mean, somebody wants to take the risk, Robert, assume the liability to loan somebody money, and the idea that person's going to be helped out and they'll make a little profit. That's called capitalism, free market economy.
I didn't say it was wrong.
Anti-capitalist,
I didn't say it was wrong. I was just saying that it's.
You called them loan sharks.
It's a legit loan shark.
Yeah, but
I didn't say it was
everybody,
wrong. I say it was legit.
Everybody wants to eat. So if Robert, if I loan you $10, I'm expecting 20 back. I mean, that's just how it goes.
Shalina is not an institution. Please, you have to be licensed. You gotta have a federal tax ID number in order to receive interest. Did you guys know that?
No, that is not true, Robert.
So if I loan you 10, I can't get 20 back?
That is absolutely
That's a personal agreement between you and I. Now, if I agreed, I will give you 20. But if I said no, and we have nothing on paper, through a contract, through a lawyer or accountant, I'm not gonna give you 20.
So then that's what I sent Tay-Tay to get my money.
Right.
So, but does anyone know what are the stipulations on the loans, and do they investigate who is putting the money in? And, I mean, who regulates
that brings up a
it?
good question. My thing is about now that government wants to come in and start regulating and start, laying down all these controls over it. Why? People have always loaned money to friends and family or even strangers.
Yeah, the
people
biggest
have
mistake in the world.
Well, maybe.
Right.
But people have always carried their own paper for the sale of homes, cars, boats, or what have you. And a financial contract between two people should not have the government coming in and saying, you know what, we need to come in and step in here. People should have the right to loan money if they want, and people should have the right to enter into an agreement and pay it without the government coming in.
But right now, more people are borrowing than investing in this.
Just one quick question. Since you said that you do have experience on this type of website and you did apply for a loan, now what is the obligation that you have to do? Do you have to scan like your card deed or your home deed or something?
Well, the
like
first
that?
thing that startled me
the
first thing that startled me was they asked about your firstborn. But no, it was just really like a regular application. They wanted to know about your job. They wanted to know about just your credit, your income, all of that.
Collateral?
Any collateral? No, they didn't really ask about any collateral. You know what they do? They look at your credit report and they kind of go just like anyone else. Well, we want to see how have you paid everyone else. And again, I couldn't really understand why I was denied because
I think on the other side, it's so dangerous.
I think my credit is pretty decent.
Well, that's the thing. I mean, I think the whole risk is with the investor. That's why I was wondering, does somebody regulate this?
But now there, you have after 30 days, if you're 30 days late, they charge it over to collections. I mean, any other, if you have a loan, they give you 90 days, but after 30 days, it's going to collections. So,
but where did you find this website?
It was I put in peer-to-peer. Just know they're there.
Yeah. But it just I don't know. It just sounds to me like any other financial institution. What's the advantage? Well, at least going to a bank, some of you got a local branch. You're not dealing with strangers. If you've got a problem, you've got somebody you can talk to. So yeah, maybe you pay fees at your local bank or whatever. But it's they're there.
Again, that's what it is. It's the less fees.
By the way, what
percentage
did you agree to pay? What was your interest loan? What did you agree with?
I agreed at like
She'll take anything they give her.
At 7%,
7%.
I agreed at 7%.
I would think that
because I could get 13 from any other bank.
Right? These kind of programs.
It varies based on your credit. So
it's 9.38%. A $3,500 loan earns 9.38% interest.
Well, it's very competitive
because
it's peer-to-peer. There's other companies out there. Because if I was an investor, I'd get up there, I'd set my rate
but
at 10.35.
I think the investors, they all kind of...
You're
the loan, exactly.
You're
Bruno.
Understanding the detail of the business, you have to set at a rate where you say, hey, you know what? I'm going to take Andrea. She has no offense. Let's just say if you had a FICO score at 550.
Mine's high.
And then Chelina's company wouldn't take you, but hey, 10.35. I'll take it, Andrea.
Right, so maybe if Chelina had said instead of 7%, do they come back and say, well, we'll approve you, but at a higher rate?
They came back and said, we'll let you know. We'll send you a letter in the mail. Exactly. But now there's another one where it's more like an auction. It's almost like eBay, where you go up and you tell them, this is what I want to pay, this is what I want, this is what I'm planning on doing with the money.
Well, this business is growing, right, Jeff? I mean, as we know right now, this business is growing rapidly.
People are trying to get money, and this time, really, people are trying to get money from wherever they can get money from. I mean, really.
So too.
Right, and I think if there's investors out there, people willing to take a risk because somebody can't get a loan from a bank and they're willing to take that risk, I think it's a good deed.
Yeah,
I mean, not a loan.
And also people just don't.
There are
trust
70-year-olds in the billionaires class,
and they were required to register with the Securities and Exchange Commission. I mean, I guess that gives them some credibility. They just won't register anybody. There's a certain amount of criteria that
they will have to obtain a corporation status, and they have to get federal tax ID numbers, just like any other legit company. Give me your perspective.